Well, there is no quick fix here, but one interesting observation is that last week we had lending data out for China. Again, a fairly weak number, which suggests that the credit impulse overall is still negative. Now, that suggests that there is not much lending demand in the economy, and perhaps because funding costs are relatively high given weak inflation. And so one potential policy prescription here might be to ease on monetary policy, whether through rate cuts or liquidity injections. But of course, that is a tricky proposition because the currency also remains under pressure with the strong dollar. And so at the best, we can hope for tweaks around the margin. There's not going to be a quick fix, really, to see a surge in activity in China. It's going to be, at best, a gradual recovery.
Property and everything to do with property, Frederic, has caught my attention in these lines. Sam, of course, highlighted the home price data, which was still not that encouraging, but some would say, you can see the glass is half full. But you've seen the big headlines coming in on the property front, not looking encouraging at all. And I'll just read out some of the lines that we've got. So the property investment slump has worsened through the period of Jan to May. Jan to May property investment has fallen 10% year on year. New construction starts has fallen 24.2% year on year, which is basically new construction activity. Property sales by floor area has dropped 20%, and funds raised by Chinese real estate developers have actually gone down by 24% year on year. Where is the light at the end of the tunnel?
Well, you sum it up quite nicely. There's one key or a problem that faces the Chinese economy. That is property. That is weighing down on industrial activity for one, but it's also weighing on the consumer. Remember, even though retail sales picked up a little bit over the month, that's still not the number that we really want to see, partly because of this headwind from the property market. Now, we have seen more of an accommodation coming through there. Maybe it takes a bit more time for that to feed through into stabilization of property market. But I think these numbers that you cite are a good reminder of how important the property market really is, how big a drag it represents for the economy. And so a laser-like focus on stabilizing the property sector is really what's needed here. And the authorities are responding to this, but it's like a super tanker that will take time to turn around.
But why aren't they going all in, Frederic? What's your better sense on that? Because I'm reading a Reuters copy, by the way, of the analysis that accompanies this data. And they're talking about how China has announced historic, quote-unquote, steps last month to stabilize the crisis-hit property sector. That's something that Sam has been all over the last few weeks as well, in explaining how much commitment they have shown, signaling to the market that they are committed to stall the fall in the property sector. But it's not happening. Analysts are arguing that all the measures may not have a huge impact on the sector until home prices start to turn around. And we aren't seeing signs of that. I mean, yeah, at the margin a little bit, but not a whole lot.
Well, we might want to we want to see, of course, more measures, more immediate measures for the property market to gain more traction. But remember, it's not an easy problem to fix. We have enormous disparate situations across the country. We've in some provinces, we have a very depressed market. In others, the market's doing better. Certainly also responsibility lies with local authorities, not with Beijing. So Beijing is trying to thread the needle here, not throwing money at the economy, encouraging moral hazard, but it's a very measured kind of approach to sorting out this mess. It is one of the biggest property bubble bursts we've known in history. It will take several years to sort out. And I think the Chinese authorities are very cognizant of the fact that they don't want to reflate this bubble. They want to have a sustainable market, and therefore just throwing money at the problem might be counterproductive in the long run. And that's why you see this much more measured approach. And by the way, the economy is still growing. It's not as if we have mass unemployment in China. It's not as if we have no growth. So actually, if it takes a bit longer to sort out on a sustainable basis, maybe that's the right choice that the Beijing authorities have taken here.